Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com with the Morning Forex Technical Report. We're going to take a look at the ups and downs and the technicals in play for the major currency pairs. We'll start off by taking a look at the euro versus US dollar. Looking at this currency pair, this swing area became a level of importance in trading yesterday. The level corresponded with the swing highs from November. And in trading yesterday, the market tried to hold support against that level, also holding support against the 100-hour moving average through here. That's the blue line of the chart. When the price fell below the 100-hour moving average, it was time for the sellers to give it a shot. And indeed, they pushed below that swing area and wandered their way down in the Asian session all the way down to their next key target, which was the rising 200-hour moving average. And as you can see, the market traders came in and supported the market against that 200-hour moving average. Why? Because risk can be defined and limited against that level. You can buy against that level and put a stop, I don't know, right here or something like that. Risk this amount to make potentially, well, getting back up to the swing area was one of the targets. So making basically about twice that amount. If you get above that level and get it back above the 100-hour moving average, things would even change even more. And that's indeed what's happened over the last hour. The market has moved above that 100-hour moving average into the early New York session and showing, more signs to the upside here. Yesterday was a day to go down. Today is a day to go higher, at least for now. It doesn't mean it's going to continue. As you can see, the price has come off against this high price here, which I had earmarked as well as a level of interest in trading yesterday and into today, I guess, as well. It corresponded with swing highs right here, and then we moved above it and fell below it here. So that level was a level to get to and through on the top side. Indeed, we haven't been able to do it. So guess what? The 100-hour moving average is going to be our barometer in trading here today. We'll see if the buyers, if you love the market, if you like the euro, if you don't like the dollar, then buying against the 100-hour moving average or against this swing area again becomes the risk level for you as a buyer. If it stays above those levels, then we head toward the high price that we saw last week, or actually, last week, early this week, Monday, at 105.943. And get above that level and opens the door for the upside for this currency pair. Also, here's what it looks like on the daily chart. If we move above that level, then we're going to start to look toward this swing area up here at 106.15 to 106.40. Just keep that area in mind. You have to go to the daily chart to see that. Let's take a look at the dollar versus yen next. And this currency pair off the daily chart. Last week moved below the 200-day moving average and closed below that level on Friday, just below that level. On Monday's trade, the market rebounded back to the upside and we started to move back toward the 38.2% retracement. And trading yesterday, we moved just a little bit above that level. And today, we moved even further above that level, but have since moved back below that level. That 38.2% retracement is the 38.2% retracement of the year's trading range from this low all the way back in the month of January to the high price that we saw in the month of October. So it is a level of significance. And in the month of November, the market did find some support buyers ahead of that level before breaking to the downside the first day of the month and moving lower, as you can see, and moving below the 200-day moving average, but could not sustain that momentum. Now we're back between the 38.2 and the 200-day moving average. Let's take a look at the hourly chart, see what that is telling us. And off the hourly chart, the price rise today did extend above the 200-hour moving average, tried to move above in the Asian session, and then was able to, on the first attempt, the market failed, but held above the 50% retracement and then moved above the level, breaking above the 61.8%. And actually some levels through here where it swing low and swing low right through here, moved above those levels, couldn't sustain that. As you can see, the market consolidated above and below those levels. And then in the last hour, seeing the dollar move to the downside. Saw the same thing in the euro, and we back below the 200-hour moving average. So the 200-hour moving average is going to be a barometer for trading here today. If the price can stay below that level, that would be more bearish here. But on the downside, as you can see, we're testing the 50% retracement of the last move to the downside. That's last week's trading range. That comes in at 136.75. And in the Asian session, the market did find support against that level before pushing to the higher upside. So get below, we need to get below the 50% retracement if this momentum is going to continue, and then we'll look toward the 38.2, broken 38.2, and the 100-hour moving average on the downside. So this is going to be our key barometer on the top side. This is going to be our key support. In the short term right here, if we get below it, we're going to be ping-ponging between the 100 and 200-hour moving average in the dollar versus yen. Now let's take a look at the sterling versus US dollar, and like the euro versus US dollar, it is moving to the upside here in trading. Yesterday we came down to the 200-day moving average and the 200-hour moving average. As you can see, we found support buyers against that level. The day sort of ran out of time in the early Asian session. We tried to hold support against its level as well and rotated back to the upside, but the momentum to the upside could not be sustained. We couldn't get above this level right here, which was a swing low in this up and down volatility day that we saw in yesterday's trading, and the market started to rotate down. We did move below all that cluster of moving averages, the 200-day, the 200-hour, the 50% retracement as well of the move up from last week's low to the high. That's this low right here to this high right here. So all that should have led to further selling pressure, but it didn't. And as you can see, when the market moved back above this level right through here, we started to see more upside, and we're moving back toward our 100-hour moving average. It's kind of sloppy market. In trading yesterday, we saw this types of, this was the, this widening of the volatility here. Started off very narrow, and then we went all the way at the upside, all the way to the downside, and so on and so forth. So, but if we were to look at the short-term trend in trading here today, we're seeing the market break back above to the upside and be a little bit more normal, more normal than this price activity. But watch for sellers against the 100-hour moving average. That level comes in at 127.20 in trading here today. If we get up to that level, I would expect sellers against the level. It also corresponds roughly with this area right through here, where we had swing lows through here, all combining there, then resistance through here after breaking, and then we did resistance again here. Here we had a couple little, during that volatile stuff yesterday, we saw this two breaks to the upside that failed. But this level this 100-hour moving average in the swing area right here is likely to be a lid, or should keep you lid on the sterling versus US dollar, so lean against that. Finally, let's take a look at the dollar versus Canada. Why? Because we have an interest rate decision. Markets are expecting 25-ish type basis, so that's what they're pricing in. The economists are saying 50. Sure is going to be listening to the comments and thinking about the terminal rate. Dollar versus Canada has moved sharply higher, over about 300 pips from this low to the high right here. But as you can see, we're rotating back to the downside here on the hourly chart. I'm going to put a Fibonacci from here to here, and also put a horizontal line where we're at right now, right here, as a sort of a barometer for the short term. It's a little below the close from yesterday, and below this old high right through here. So if we were to move back below that level, I think we head down toward the 38.2, maybe the 50% retracement, and catch up, or have the 100-hour moving average start to catch up to the price perhaps. It's moving sharply to the upside through here. We'll be watching those levels on the downside. On the top side, if the market should move higher, you have to go to the daily chart. And if you look at the daily chart for this currency pair, we moved up toward the 61.8% retracement of the move down here, 136.898. Get above that level and stay above that level, and we get into this up and down type of volatile area here for the dollar versus Canada. It's not an easy chart to decipher, to be honest with you, apart from maybe this support down here against the 100-hour moving average in the swing area. But lots of up and down volatility in that currency pair. Maybe congruent with what's going on fundamentally in the country as well. So there you have it, a look at some of the major currency pairs. My name is Greg Michalowski. I hope this prepares you for your day. Good fortune with your trading. Bye-bye now.